traders, Akil Stokes here, and welcome to another video. If this is your first time joining me, I'm a Forex trader, trading coach. I am also the co-founder of Tier1Trading.com. In today's video, we're going to take a look at what is my favorite trading opportunity of the week. I'm actually already involved in this trade, but I'm going to show you how there may be other opportunities for you to get involved in as well. But before we get into that, and of course we're gonna break down the technicals and all that fun stuff. But before we get into that, I also want to talk a little bit about trading psychology. It has been an extremely slow period in the markets, at least for me. And I want to talk a little bit about the differences of how struggling traders and successful traders handle those quote unquote slow periods. But before we get into that, I want to bring up something that I thought was pretty cool, and it gives me a chance to kind of explain a little bit about what we're doing here. I got the comment on one of my past videos from a trader. It was their first time joining me, and they said, "Hey Akil, I checked out your video. I listened to the first minute. You didn't show a chart, you just talked, so I turned it off. Thanks for wasting my time." And that brought the biggest smile to my face because that is purposely done. Understand that, not only are we doing these videos out of the goodness of our heart, but I take a lot of passion, right? I get a lot of passion from teaching traders, right? I am passionate about trading myself. Trading is a skill that I have learned. It has allowed me to create the perfect life for both me and my family. It is also something that I can use to contribute, something I can use to serve the greater good of humanity. And I know that seems like a big thing, but I do believe that we are measured by how many people we impact. Different people impact the world differently. Some in a great way, fresh water in Africa. Others in a smaller way, like myself and Jason Greystone. But we understand that there are people out there that are trying to gain control over their finances. They're trying to achieve financial independence so that they can serve in other aspects of their life and do whatever they want. And for me, trading is the tool that allowed me to get to that level. And trading is the tool that we work with many others with that will hopefully allow them to achieve that financial independence, which will allow them to follow their passion in life and really do what they're meant to do out there. And the reason we spend the first part of these videos not getting into the charts and kind of talking and doing lessons is for two reasons. One, it's important. There's a big difference between what the internet thinks is necessary to know in order to become a successful trader and what actually is necessary to know. And if you talk to any professional trader out there, they will tell you that the system, the strategy, the analysis, that's a small part of the picture. The much bigger part of the picture is the psychology, the process, the success mindset. Because if you have that mindset, it's only a matter of time before you will become successful, assuming you do things the right way. And you can do things the right way by failing for a very long time and learning from your mistakes, or putting yourself in a position to get coached and mentored and have that person kind of guide you through the process, right? Either way works, just one is obviously shorter than the other. But because time is so important to me, I hate wasting time working with traders who aren't serious, right? It's just a waste of time. There's no other way to put it. So the reason we kind of talk for the first whatever minutes of this video is to purposely weed out those who are not serious, right? It would be the same thing as if we were to do an application. If you want to come work with us at Tier 1 Trading, fill out this application. We'll go through that application and see if you're the right fit. It's really the same thing, because I guarantee that all of the non-serious traders have already left this video. Right? We've been going for maybe 5 minutes already. They haven't saw that get rich quick scheme. They didn't see the signal that's going to make them profits on Monday's open or Sunday's open. So they left and went to the next video. And what that does is it ensures that the people that I'm talking to right now, you guys are the most serious group of traders out there. You guys are going to be the ones that we end up working with. And you guys are what allow us to grow the best community of traders out there. And that's something we're very proud of. When Forbes magazine mentioned us and is part of the group of innovations in trading education and saying that the community aspect that we have at Tier 1 stands above all, that's because of you guys. And that's probably the best recognition that we can get. So that's my way of weeding it out. But before we get into the charts, let's talk about this week, because in the last 2 weeks, I've taken 2 trades. Now, I've taken 2 trades today, but prior to that, in the last 2 weeks, I've taken 2 trades, and it's been very slow markets. And there's a massive difference between how struggling traders look at slow markets and successful traders look at slow markets. So for you guys watching the premiere live, right, you have the chat right over there on your right side of the screen. Do me a favor, type in, if you're not watching live, type it in the comment section below. How do you think, or what actions do you think a struggling trader takes during slow, boring markets where there aren't a lot of trading opportunities? Type it. Right? My guess is that you said maybe over trading, right? That's probably some form of that. Seeing signals, hunting for trades, taking things that are outside of their trading plan, AKA bad trades. And if you said that, you're 100% right? They need that action. It's boring sitting there and watching the markets just move kinda and you not being involved. There's this association where it's like gambling, where, hey, if I'm sitting at the table, I have to be playing. If I'm sitting in front of my desk, I have to be taking trades. And because of that, you see traders getting bored, getting into positions that they shouldn't be in, ultimately losing money, and then either, making up an excuse for it or going back through their journal and saying, why the hell did I take that in the first place? Now, successful traders, on the other hand, completely different mindset, right? We are ingrained in the importance of taking a good trade, right? Good trade over bad trade. I'm actually gonna share a podcast probably early next week or maybe the week after that of a conversation we had in the live room about cutting down on trading mistakes and really shifting the mindset from profits oriented to process oriented, and that's big. So keep an eye out for that. Probably not next week, the week after that on the Trading Coach podcast. But successful traders look at it as an opportunity. Sure, we're not trading the markets, right? In one way, it stinks, right? Sometimes you're doing all this analysis and you want to have action, but on the other hand, you're not taking bad trades. You're avoiding that pain and you're following your rules. But we look at it as an opportunity to train, right? Think about, I relate trading to a sport because I'm a sports nerd, a former athlete, trying to still be an athlete. So I relate everything to sports, and I think about it like a professional sporting event. Let's take American football, right? I don't want to talk about the other football because Everton disappointed me badly last week. 3 goals in like 5 minutes. Anyway, they suck. But I'm still a fan. I see you, Stuart, you're hanging your head too. But let's take American football, right? So they play 1 game a week essentially, right? Every Sunday. And that's kind of the execution, right? They're executing all the game plan that they learned throughout the week. Well, what do you think they do during the week? Type it into the chat on your right. What do professional athletes do when they're not competing at the actual event? Are they just sitting back, twiddling their thumbs? Right? Are they finding other events to do? Are they going to like a little league game and playing against little kids just to play the game? No, they're practicing. They're fine-tuning their skill. They're at practice with a coach. In the off-season, they're at practice with teammates, and they're working on something that's going to get them better. They're working on something that's going to allow them to execute in the game better. And as traders, we're doing the same thing, right? We're doing our analysis. Even if we know there's nothing there, we're doing our analysis. IPDE, identify, predict, decide, execute. Identify, predict, decide, execute. We're making predictions. We're drawing out lines, right? We're doing analysis in the market, working on our craft. And if you're not doing that, maybe you're spending some time doing strategy development. Maybe you're spending some time doing back testing. Whatever it may be, you're working on doing something that will ultimately improve you as a trader. And when you invest time and effort in working on that, practicing your skill gets better. And when it comes time to execute in the market, boom, you don't miss your opportunity. And we're always prepared. So even if there's not an opportunity at hand, you're always prepared for the next opportunity. And when that opportunity comes, especially if it comes quick, you're not going to miss it because you're ready. And that's the trading opportunity we're going to look at today. It's on the dollar Canada. This was a trading opportunity we've been looking at, I believe, since last week, and if not 2 weeks ago. And the market hasn't really done anything. It's kind of bored us to sleep. And then this week, it finally started entering the zone where we were looking for. And I ended up getting a trading opportunity today. So what I want to do first is I want to take you back through one of our Trading Edge videos from yesterday where I kind of redid the analysis for the newer traders on the platform and showed you what I was looking at. And then when we come back, I'll talk to you about how to get involved if you're not already. Hey traders, Akil here. Welcome back to another Trading Edge video. It is Thursday, March 14th, a little bit before 2 p.m. New York time. And I have a few pairs I want to take a look at today. I was purposely waiting until after 1 o'clock in the Brexit vote to see if there were going to be any last minute moves or reactions on the pound pairs. And I'm going to check again right now, but I believe not much has happened, which is a little bit disappointing. So we're going to avoid those pairs again, and we're going to start off here on the dollar Canada and review a trade that I think I brought to you earlier in the week. I kind of forget. I do all these videos. I do the live room each and every day, and basically I review the same charts every day. And if you're a swing trader, meaning that you're watching the charts on the higher time frame, you know that the story of the market, especially in this slow year, doesn't really change too much. So if you saw this already, it will be review. If this is new to you, it is new. But Canada, I'm looking for a buying opportunity. If you remember, we were looking for a pullback into previous level of structure. Now, overall, Canadian dollar is bearish and bullish and bearish and bullish. We're really in consolidation. I don't have a read. If you go to the weekly, you'll kind of see a bigger downtrend from here. If you go to obviously the daily here, you can see a smaller downtrend, but if we zoom in a little bit more, you can see an uptrend. So we're kind of all over the place here. But what's most important to me right now is the most recent move. And the most recent move is this, right? We've come down here, we've retraced, we've put in a new structure low, we've failed to reach previous structure highs, then we failed to reach previous structure lows, and then finally, thanks to some bad news for the Canadian dollar, we have put in a new structure high. So what I'm looking for is a retest into structure, a pullback, an outside return, and an extension up to the $1.36 level, which is going to be this area of structure up here. Now, the one problem that I have with this, and it stops it from being kind of a grade A opportunity, is that because this move, this final move up was so impulsive, it was a high momentum bullish move. You can see 1, 2, 3, 4, 5, 6 straight bullish candles in a row. There's not a lot of structure there to really pinpoint an area on where I want to get long at. And there's not a lot of structure there that I can use as safety, as protection for my stop loss. So what I've been looking to do is take a conservative approach. And this is where knowing multiple tactics, having multiple reasons to enter the market comes in handy. For you guys that have been going through the courses, right, you learn a lot of ways to enter. You learn about 2618s and double tops, double bottoms, and L3Cs and H3Cs. At the point where I'm at in my trading, I have the ability to use either of those depending on the situation, right? More aggressive situations, I can use a more aggressive entry. More conservative situations, I can use a more conservative entry. And this would be one of those conservative reasons or conservative trading opportunities. So we're going to go down to the 4-hour chart real quick, but I want you to pay attention to where price is currently trading at. We're trading at an inside level of structure right here. So it's not going to be the same as major structure for you guys doing your CTS trade, but it is a level of structure that we should pay attention to. This is going to sound horrible, but it's the best we can get right now. Now, if we want to add any more confluence to this opportunity, not only do we have structure looking left inside, but if we take our Fibonacci retracement tool and drag it from our swing low to our swing high, you're going to see that we're right at a 50% Fibonacci retracement level. Again, 50% isn't actually a Fibonacci number, right? If you know Fibonacci math, you'll probably be scratching your head like, why are you using a 50% retracement? But it is a psychological number. Again, the mind, the human beings, we like whole numbers, we like half numbers, we like quarter numbers, stuff like that. So 25, 50, 75, 00 are going to be important psychological numbers for us. And you see we're coming right to that level. We also have the RSI oversold. You can see down here on my RSI, we have gone under the extreme. My RSI is set to 20 for oversold, so I'm looking for extremely oversold conditions, and we have achieved that on the price chart. Not only that, but this was something brought to us by one of our traders in the live room. We have an RSI swap, meaning we have a situation where the RSI goes from directly overbought at the peak here to directly oversold on the retracement. And for you guys that know me, that RSI swap is something that I look for in trend continuation opportunities. So what I would be looking for here, we already had a higher high, higher close, which could have been an entry reason in its own right. Beautiful 3-bar reversal here. If we kind of zoom in, right? Foundation course members, you're licking your lips at this. Yummy, right? But I told you I want to take a conservative approach because I just don't have the structure to really have my back here. So what I'll be looking for is a double bottom. So I'll be looking for a retest of structure and a chance to get long. If you want to be even more conservative, wait for the 2618. All right, so just a reminder, the Trading Edge video is something that comes with your 14-day trial. So if you are a serious trader and you're looking to really get started and make that jump in your trading, stop struggling and become successful, make sure you check out that 14-day trial. It's risk-free, it costs you $1. It expires after 14 days, no auto bill. Just head to the link below this video. It'll take you right there where you can sign up. But the Trading Edge is that daily video where Jason Grayson and myself come in and not only share with you the opportunities that are on our radar, but we try to take what we're teaching in the course and practically apply it to the markets. I got a handful of emails the other day, and it's weird, they all came in at once, from traders comparing what they're doing here at Tier 1 versus other places. And if you guys saw Friday's podcast, the horrors of trading live too soon, there's a good example of one of our clients who did the same thing, who bounced around from educator to educator, or excuse me, my bad, he told me, Ray told me, don't call them educators, call them salesmen or scammers. But he bounced around from one-to-one, being kind of taught but not really coached and mentored. And that's the biggest thing that I got from the handful of comments that I received this week, was that they feel like at Tier 1 they're being taught, right? They're not just being thrown information saying, here's the information, learn it, do what you want. We're taking the information, we're teaching it to you, and then we're working with you to make sure you really know it, and then we're working with you to make sure you see how it's practically applied to the market. Because there's a big difference between taking something from a book, right? The picture perfect opportunity, versus seeing it in the live market. It's a drastic difference. So it's very important that we bridge that gap. So the trading opportunity has already occurred. It's a Friday when I'm recording this, so it's about 2 o'clock in the afternoon. So I know the European session, you guys are done. The US session is still going on, so we're still seeing a little bit of movement, but I don't think the market's going to move too much from where they're at right now. So let's dive back into the charts. Let's look at the situation, and let's talk about ways that you can get involved in the future if you still want to be involved in this bigger move. All right, so we take a look here at the dollar Canada chart. It's about Friday, 3:15 p.m. So again, I don't expect too much movement in the market for the rest of the day. But you can see that earlier in the day, we did get our double bottom formation. And for you guys that are new, a double bottom is a very simple pattern formation. It's one of the basic pattern formations that we teach here at Tier 1 Trading as a more conservative way to be involved in the market. And essentially, the pattern formation is exactly what it sounds like. The market comes down, we start to reverse, giving us our first bottom. We retest, giving us our second bottom, looking for that previous level of structure to hold, and hopefully seeing a reaction off of that. Now, I didn't get the ideal entry, right? If we look at where our double bottom closed here on the 4-hour, we technically had a completion at about 132.98. I got involved a little bit higher, right below 133.20s. And the reason for that is I just wasn't awake. If we go down to the hourly really quick, you'll see that I woke up about, a little after 6-ish this morning. So I really didn't get involved until the close of this candle up here. So not the best entry in the world, but because this particular trade has such a great risk reward, it wasn't a big deal being 20 pips so late. Now, I mentioned at the end of the video an even more conservative way to approach this, or another way to approach it if, say, you missed the double bottom, or if you're really looking for confirmation, would be a 2618 opportunity. And a 2618 is essentially a double bottom with a retest. So you can see that we did get our double bottom here. we actually ran into something else. Can anybody see what this is? I know George saw what it is because he made some money off of this morning, I believe. Let me just double check real quick. We were talking on the chat this morning about 2 pattern formations. Yeah, we had one on dollar Canada, one on Aussie Canada. I couldn't take this one because I'm in the trade, but the Aussie Canada one came down and hit profits as well. So funny, 2 quick winners on Friday and 2 trades for the prior 14 days before that. But as I mentioned before, that's how the markets go. But we have a Gartley pattern here, right? If we just measure this out real quick, our swing high right here, X to A, our first retracement, A to B, our double bottom is going to be that B to C, and then our decompletion is going to be right up here for a bearish Gartley pattern. Now, I did mention that I saw the Gartley, I could not get involved because I was already in the trade. This is another lesson for another day, but we talk a lot about traders trying to do too much. Traders trying to not really having a tried, true, and tested strategy, but really kind of going into the market and doing this, doing that with no consistency. This is an example of how you have to know your trading plan, because if you don't, how do you handle this situation? Do you stay with your original trade? Do you get out of your original trade? Do you take the Gartley? Do you not take the original trade and only take the Gartley, right? How do you handle that? And when you see something like this, imagine it from my perspective. You see something like this when I'm in a trade right here and the market's rallying up and it goes up about, I think we're up like 40 pips at max, 40, 50 pips. And you're getting all excited because we broke the high part of our double bottom, which is a good sign, higher high, higher close. And then you see a Gartley here and the market starts to reverse. You probably get a little scared, am I right? How many of you guys have been in a situation where the market is rallying up? Let me just go back and give you a naked chart so you can see it. How many of you guys have been in a situation where the market is rallying up, you're getting all excited, and then you see a candlestick that looks like this, right? You see it live, push up, push up, push up. Imagine this live. The market is rallying up, rallying up, rallying up, and then boom, it gets rejected and starts to go against you, right? How does that feel? Not too good. It probably puts a little fear into you. Add to the fact that you hear other traders talking about, oh, this is a Gartley as well. And you have this idea of, oh, this is a powerful advanced pattern formation too. I must be wrong. And it's very easy for you to really just ditch your trade and abandon it prematurely. So another good example, and again, not to get into too much of a lesson because I want to keep the lesson to earlier about slow markets, but a good example of how you have to trust and believe in yourself and trust and believe in your system. But something that this Gartley pattern has given us is that 2618 trade. So as we retest back in the structure, right? If you're traditionally trading as a 2618, you're looking for price to come into this area. If you're more structure oriented, it doesn't really matter about the fibs. You're looking for a zone. But if we retrace back into this level, look for that buying opportunity and a second opportunity to get involved. Traders that were in the Q&A, we talked about complex pullbacks. This could be one of those lower time frame complex pullback patterns as well that gives you that opportunity. But look for that retracement, look for the pullback, and look to trade it. And of course, you can trade it as simply a 2618 or part of the bigger trade. Now, if you're looking at yourself and saying, well, Keel, I can't trade the 2618, I'm not too interested in this level, something else you can look for is this. If we go back to the 240, because ultimately my prediction is that price is going to travel up to that bigger VS1 level. And the VS1 are the red and green boxes on your chart. Those are visual structure tools, and what they're used for. You know, I like drawing out structure myself, but what we've noticed in teaching traders, for the newer trader, it helps them really get an idea for what key levels of structure they should be paying attention to, especially on the higher time frames. So it kind of gives them a point of reference. And for really traders that have been doing this for a while, that understand structure, they know what levels of structure they're looking for, it just gives them kind of a quick reminder, right? Instead of going back out to the daily time frame and asking myself, okay, where's structure on the daily? I can just set my VS1 levels to the daily chart, and boom, your daily structure levels are going to show up right in front of you. So it's useful. Like any tool, it complements you, the trader, and what's happening on price chart. It doesn't make the decision for you. And that's something that we do with all of our indicators. Even our pattern recognition software, the purpose isn't for you to just click it on and trade every pattern that it shows you. No, the purpose is to use it as assistance as you're training your RAS, you're training your eyes to see and recognize patterns as a new trader, and you're using this as kind of a secondary coach. So instead of just emailing Jason Greystone or myself or asking traders on the chat, you kind of have an indicator, a machine that says, hey, this is right, this is wrong, if you're seeing it the same way. And then of course, as a veteran trader, it makes pre-market a lot easier. You can have it on instead of just drawing out all the X to A to B, B to C, all that fun stuff. You can click it on. It gives you kind of a quick reference on, hey, there may be a pattern here. Then you can go and confirm yourself by drawing it manually. But anyway, the bigger picture is I'm looking for a move up to these highs up here, which is going to be about 130. Let's go. Hold on, not those highs. Here we go. These highs. 136.50-ish, right? These highs up here, those are the first highs. And what that means is that if price action can break these highs, we still have a lot of opportunity to take advantage of a trade between here and here. So even if you can't take advantage or you don't want to take advantage of a trading opportunity within the zone, you want a little bit more safety, you want that confirmed 3-point trending move that we teach you, right? Wait for a breach of these levels right here, these 134.66 highs, then look for your opportunity from 134.66s, about 200 pips higher to about 136.50s, and there'll be plenty of room there, whether you are a day trader or a swing trader. And this is why this has been the number one trading opportunity, and now trade, that's been on my radar for the last few weeks. All right, that's it. A long one, but I hope you guys enjoyed. If you did, do me a favor, hit that like button, subscribe if you're brand new. I don't know why you're not subscribed already. Make sure you hit that notification button as well. That way you're notified whenever we do these premiere sessions, so you can come and join us live. But also leave a comment below. Let me know what you thought. Let me know if you found this to be insightful, valuable, or hey, good job, Akil. All of that helps. My goal is to grow this channel to 50,000 subscribers by December. It was a goal that another trader put out for me, and just like my push-up goal, I just say yes to challenges, so I did it. But now I'm all in, so let's do it. So comment, like, subscribe, share this with a trading buddy of yours, tell them to check it out, tell them to subscribe as well. There's massive value here, and it's a big help to myself, it's a big help to Jason Greystone and everyone at Tier 1 Trading that you support us. So hope you'd enjoyed. Until next week or next time, who knows when I'll be back next. Plan your trade, trade your plan. Good luck in the markets, and I'll see you guys on the platform.